Major West Asian stock indices, including Saudi Arabia's, fell to their lowest level since 2020 on Sunday due to a free fall in oil prices and fears of a new global trade war. Fears of tariff wars and plummeting oil prices sent West Asian stock markets, which include Kuwait, Saudi Arabia and Qatar, down on Sunday. The regional losses were intensified by the worldwide market collapse that started last week. Indices in Qatar and Kuwait plunged over 5.5%. Saudi stocks take a 5-year record fall after Trump's tariffs. Stocks in the Saudi kingdom sank over 6%, the most significant single-day sell-off since the start of the Gaza war in October 2023, when Hamas attacked Israel and Tel Aviv stocks collapsed. Saudi Aramco, the biggest oil exporter in the world, lost more than $90 billion in market capitalization. Now, the prospect of a prolonged period of lower oil prices risks West Asian stock markets in response to the trade war and OPEC Plus decision to increase output by 3 times than initially planned. Brent crude fell 13% on Thursday and Friday. Many in the region rely on high crude prices to balance their budgets and fund investments in economic diversification initiatives. The International Monetary Fund estimates that Saudi Arabia and Iraq need oil at prices over $90 per barrel. Kazakhstan needs oil to be more than $115 per barrel to fund its fiscal deficit. All right, to discuss this further, I'm now being joined by Jayant Krishna, who's a senior fellow at the Center for Strategic and International Studies, joining me live from New Delhi. Mr. Krishna, thank you so much for making time for us. What's your view on Saudi's decision to cut oil prices on demand worries?
It is, if you look at Saudi Arabia, the world's largest oil exporter, and Saudi Aramco, is the world's largest oil producing and oil exporting company all over the world. So I think it all started when the OPEC countries, they decided to increase, their production by about 4 lakh barrels per day. And their logic was that they would like to discipline, Iraq, Kazakhstan, and, all these things through a demand and supply and price game, kind of a thing. And as a result of which, Saudi Aramco has lowered the price by about $2.3 per barrel, especially for Asian consumers. So I think it all, overall, if you look at, there's been almost a 10% drop in the oil pricing since the U.S. Trade tariff, game started on 3rd of this month earlier. And President Trump actually wants OPEC countries to bring down the oil price, for multiple reasons. One, they say that, it will contain inflation, which is actually true. Another is to put some kind of a pressure on Russia, as an invader of Ukraine, and put a lot of high intensity pressure on them to end the war. I think these are the I would say reasons why we are seeing what we are seeing. But for India as a large consumer of oil, that way it's a good story if it goes down. Yes. The price goes down.
Mr. Krishna, coming back to Saudi Arabia, it needs oil to be above $90 a barrel. But with what's happening currently with the tariff wars, OPEC's decision to hike output, crude prices have slumped. And this is as per what Trump wanted. What's your take on this regarding the impact on Saudi Arabia and a larger impact?
Asia has 2 of the world's largest consumers of oil, right? China and India, right? So anything that it does with a lot of calculation. It is not a knee-jerk reaction. Look at India itself. It buys. And the fact is, during our trade negotiations with the U.S., when I'm saying I mean India, Prime Minister Modi has promised President Trump that, he will buy more oil. India will buy more oil from the U.S. Today, India buys about $15 billion worth of oil every year from the U.S. And it has been promised that this will go up to $25 billion per year, in the next cycle. So I think these are the kind of reasons why you see, despite the directive being or the general economic understanding being that you shouldn't bring it down from to below $90 per barrel, but these forces, the U.S. pressure, the aftermath, what has happened because of the tariff situation leading to a tariff war. I think all this has happened, and India is a very, very big customer. I mean, it basically 85% of its oil requirement is based out of imports, right? And it is the third largest oil consumer as well as importer all over the world. So I was not surprised to see Saudi, Aramco drop the prices for major Asian customers.
Mr. Krishna, staying on with the West Asian stock markets, they have of course taken a hit from the wider market mayhem. Your outlook for what to expect in the week going forward?
So all across, if you look at the Middle East, they've experienced the biggest drop in the stock market since the year 2020. Saudi Tadawul index dropped by about close to 7%. I think it's a lot of people said that it was equivalent to a Black Monday, what they saw yesterday when the Asian stocks fell, from 4% to 10%. It's a brutal hit actually, which Asian markets have taken, and it's all an outcome of the 3rd April's reciprocal tariff, which started, and the global selling, the sell-off started, the pressure started. And they all have a fear of recession looming large. Japan, if you look at it, dropped almost 8%, the index. Taiwan, and despite the fact that the chips are excluded from the scope of US tariff, So Taiwan's economy may not be affected to that extent, but still Taiwan's stocks fell by about 9.8 to 10% yesterday. Shanghai Composite fell by about 4.2%. Indian stock markets are also affected, though not to the same degree as the rest of Asia. But we also, our Sensex and Nifty fell by about 3 to 4%. So I think it's a global phenomenon and leading to some kind of what appears to be a huge tariff war. And I don't see any let up unless there's some rollback of a tariff for key countries by President Trump, which I don't see would happen. But that's the expectation. If it doesn't happen, stock markets, their behavior, what we have seen in the last few days, is likely to continue for at least a few more days. That's what I feel, Shivam.
I understand. This week definitely seems to continue being tense for most people involved and stakeholders involved as well. Thank you so much, Mr. Krishna, for joining me. That was Jayant Krishna joining me from New Delhi.